So one way we can think about hedge fund, it is basically a super aggressive investment firm. So let's see an example of how this works. So imagine there's like a group of people whose basically goal in life is absolute return on their investment. So what they're gonna do is they're gonna give the money to fund managers, which is basically this hedge fund, the money managers for this hedge fund. So what these fund managers are gonna do is they're gonna use really risky strategies such as short selling. I think I've made video on this, so you can look at it. Leverage is basically using debt, so they took out a really big amount of loan to make sure that they get really good return. Derivatives, basically like quant, arbitrage, and also they will invest in cryptos and real estate. Cryptos obviously being like super risky, but yeah, they will try to make as much profit as possible. Even though it's only 1%, they will still take it as a return. And usually the customers for hedge fund is not your retail investors like you and me, not like someone who just invests for fun or for retirement. Usually it's super wealthy individual who, don't really care about money anymore, and institution investor. So institution investor is basically an institution who's pulling money from people. So they collect money from people to invest on their behalf, but they usually don't use really aggressive strategies such as hedge fund. But hedge fund is one of their way out basically, but they don't really depend on 100% on hedge fund. Instead, they also depend on like stock market, mostly bonds, and also some treasury. So yeah.